Hello and welcome to Pro Trader Strategies Market Commentary for Friday, January the 12th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on with some economic data. Across the pond, not really so much. We did get an Italian industrial production month over month came in unchanged, was expected to be 0.6%, although they did revise last month's number up from 0.5 to 0.6%, not really going to make up for that shortfall that we saw coming in this year. But Italian industrial production really is not a driver of the European economy, so it's really kind of a pretty small portion of the overall economies of Europe. Anyway, back here into the United States, we got CPI, which is Consumer Price Index, month over month, came in at 0.1%, expected to be 0.1%. But we really kind of look at the core CPI month over month because that strips out more volatile food and energy prices. So that's usually the gauge that we're more likely to look at. And that came in at 0.3%, expected to be 0.2%. So slightly higher than expected. Anything higher is obviously better for the overall economy or shows robustness in the economy, and it would be good for U.S. currency as well. And then we got core retail sales, which strips out autos, usually more volatile, and that came in at 0.4%, expected to be 0.3%, and they revised last month's number up from 1% to 1.3%. So better than expected on core retail sales. Just retail sales, which includes autos, came in at 0.4%, lower than the expected 0.5%, albeit they did revise last month's number up from 0.8 to 0.9%, so kind of a wash there on the auto side for the most part. And then we've got the economic optimism, came in at 55.1, expected to be 52.3, so overall survey shows that more people are a little bit more optimistic over the economy. And then we've got the business inventories came in line with expectations at 0.4%, expected to be 0.4%, but they did revise last month's number up from, down from 0.1 to even, so a little bit lower than expected there. On the business inventories, we would expect to see that number was a negative 0.1%, and they revised it up to unchanged, which means more inventories, not necessarily good, especially coming out of the holiday season. We'd expect to see inventories be moving through those businesses due to sales, so that's not really showing that necessarily. That's a pretty tough nut to crack on the business inventories because there's so many levers and pulleys that could be determining what those inventories are doing. If they're expecting more sales, then they're obviously going to increase inventories, and vice versa. If inventories are going down, maybe it's due to production cuts and because they don't expect more inventories to be moving, so they're just kind of moving old inventory. So that's a really tough one to really look at it, and not always a widely looked at one for that particular reason. Anyway, let's look at the overall markets. We're still above the trend line here in crude oil futures, and we're off just slightly by about 10 cents. But as you can see here, we've got these counter-opposing dojis, and yesterday I talked about this could be a continuation pattern with Wednesday and Thursday's setup. Now we got another doji where we kind of broke below the trend line, came down, tested this 100 Fibonacci level. That's not a great Fibonacci setup here. I do have the extensions on, which you can't see, but at the end of the day, it did come down and test that area right there around 62.87 for the day session. But now we're up near the highs of the day for the most part. Still negative on the day from yesterday, but you can see it is still lockstep moving along that trend line there nicely. Gold futures moving higher despite the fact that we're seeing equities blast off due to the good economic data that we got here today. But gold futures up over $8, almost $9 at this point, 13.31. Well away from my 12.21 call that I was looking for gold futures to kind of roll over, and it just has not done that. The gold is just really pretty robust. We're up about 200 points in the Bitcoin. Just looking at Bitcoin, it's been sloughing off quite a bit. A lot of the other ones are really kind of struggling. Ripple is one of the ones that most millennials are getting into right now, and that one's had a really bad go at it for the last few days, at least this week anyway. And I mentioned yesterday Warren Buffett buying puts, 5-year puts on all of cryptocurrencies. All right, on to the bonds. And bonds unchanged on the day for the most part. Yesterday, we did get a confirmation that this is looking like at least a midterm bottom. I still expect bonds to continue to the downside as we look at interest rates increasing, but this has had a few days of sell-off and could just be looking at profit taking going on here. We used to call it maybe a dead cat bounce, where you get to slam down a little bit of a fake rally here and then a continuation to the downside. We'll have to see how that goes next week. Now VIX is up into double digits again right now. As you can see, it's up at 1022 and back into double digits. But despite the fact that we're seeing, it's always a little bit bizarre when you start seeing VIX go up when the equities are going up, especially if we look at the Dow Jones Industrial Average up over 200 points right now, and you're starting to see VIX creep up. Now, VIX is usually a fear indicator, and due to people buying puts to protect to the downside. And we'll see this time and again when we are at all-time highs, but a little bit strange that it's up as much as it is with the good economic data and the Dow Jones broader equities up across the board, as we'll see here with the NASDAQ. Got above that trend line yesterday, settled above there, continuing to the upside. Did come down and test that trend line again today, but has now since started rallying, and we are just a few ticks off of the highs right now. So this high is an intraday high, so that is a solid number that chartists and people will talk about. Anytime it happens in the overnight, we kind of discount that a little bit, but when it's a day session high, that is a pretty big deal, and we're seeing that again today in the NASDAQ, as well as the E-mini S&Ps up 13 points on the day. Yesterday was a historical high settlement. Markets just really rallied for the most part all day, as we'll see here on the breakdown of the E-mini S&Ps. This is what I was talking about yesterday, just unabated for the most part. We did have a little bit of a downtick here, but for the most part rallied right into the close. Again, overnight inventory getting long. They kind of got slammed out right before the opening of the day session, but as you can see, not even a red candle in the day session thus far today. So we're just slightly off the highs of the day by about a point and a quarter. Almost 3 points for the most part. But at the end of the day, you can see one little tiny red dot here for that 30-minute chart, and then back off to the races to the upside. So overall, equity markets looking pretty good. I still have not done anything in Gilead. We talked about this yesterday, getting ready to pull the ripcord on it. It seems like it's really slowing down to the upside. If we break above this high here of 79, 74-ish, or 79.68, let's call it, that's where I'm going to be looking to pull it now at this point, because it looks like it's kind of topped out. I was hoping to get a bit of a confirmation today, not yet seen, but would like to see this kind of cruise over to the downside. Now, UPS didn't cover it as well, still in this trade, and looking like it could be topping out just a little bit also. So I'm going to kind of stick with this, itchy trigger finger ready to get out of any of these at any moment, but at this time I still have those on, and looking at it like the probabilities are testing me. 2 times the delta is the probability of being tested, and that's what I'm feeling like that's what's happening right now. I'd like to see a little bit of a correction here, and I'm going to be looking to cover those rather quickly, and probably next week at this point anyway. In today's webinar, we're going to be talking about the short call spread. So if you're getting into options trading, kind of newer at it, I'm going to kind of set this up so that the newer trader will understand it, but I'm also going to have a lot of little nuggets in there for the savvy trader or the guy who's in there every day trading options. So I think everybody will have something to take away from this. So go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.